All right. So when I first got introduced to trading, someone randomly sent me out of nowhere back in 2016, in the middle of 2016, someone sent me some ICT videos. They were the old school market maker series, the old school scout sniper, and then I think the Went series as well. Um, that's how I got introduced to trading. I feel like that benefited me um, dramatically because I was never exposed to anyone else's teachings. I was never exposed to anything else. So I just went straight to ICT. But um, so the highlight of this session, this lecture, like you guys already saw, is going to be us talking a lot about how to discover the PD array matrix. How do we dive into that? How do we think about that? Because yes, we can all learn from the same person. We can learn these same concepts, but the fact of the matter is, how do we process it in our brain and how do we think about it? Everyone thinks inside of their brain differently. We can all watch the same exact video, but everyone's going to interpret it different in their brain. So I feel like over the years, have developed, I'm blessed. I like the way I think. I like the way I think about this stuff. So that has a huge factor, in your ability to trade and read price. So the PD array matrix, let's go ahead and open that up. And there'll be a question and answer section in here. I'll let you guys comment and I'll, maybe I can unmute some of you if you guys have any questions or anything, but let me go ahead and pop this up. And this will get better, guys. This is just the introduction. I am a little nervous, but it'll be all right. Let me find it. So, like I said, the PD array matrix right here. So for those of you that don't know what it is, you guys can't see this? No? Okay, hold on. I'll get you. What about now? Okay. Yeah, I'm still dealing with this Zoom. It's weird. I should have listened to Romeo and done maybe the Telegram. So anyways, this is core content, but this is also an experience. So the PD array matrix, we'll go ahead and define this real quick. So it says, when defining the market conditions, we think in terms of where the price can reach for, both in a rally and in a decline. This is the foundation to determining likely market direction. The PD arrays that have been traded to or executed on most recently indicate the opposite PD array spectrum will be reached for. If discount arrays have provided support for price, probabilities increase that the premium arrays will be sought above the market price. If premium arrays have provided resistance for price, probabilities increase that discount arrays will be sought below the market price. Sorry. So then we have illustrated a picture here of what he's actually talking about. So we have, let's say you draw a Fibonacci tool from the high of the picture down to the low, and then it's going to give you 50%. That's in the middle, equilibrium. Everything above that is a premium, and everything below that is a discount, okay? And when it comes to entries and exits and everything I look at inside of these markets, he listed all of those things. This is literally all I care about. Not so much mitigation blocks. That's not my cup of tea. But so everything we talk about is going to be listed right here in this picture. We have old highs and old lows. We have rejection blocks. We have order blocks, fair value gaps, liquidity voids, and breakers. Okay. So we're going to break that down top down from a monthly all the way. You can break it down all the way to a 1 minute time frame, but you have to remember which fractal you're working within and which dealing range you're working within. So here in a couple minutes, we're going to break. I have plenty of examples and I have a lot to talk about. So we will touch on other stuff like market maker sell models. and buy models as well. So periodically I will look at this chat, just to make sure everything's going smoothly. So if you haven't already, I want you to screenshot this PD array matrix template right here, because this is the source. This is where everything comes from, in my opinion. Everyone has different opinions. Romeo may say something different. Skittish, Stock, everyone has their own way of doing things, but I found this way I'm about to show y'all one of the easiest ways to interpret price action. I will post this if you guys need me to. I'll post this picture in the Telegram chat. Yes, it is from ICT Core Content. I don't care. People say, oh, you're selling core content. I'm selling y'all an experience. That's what this is, okay? So keep this in mind. All of these things right here, we're going to talk about. So when price is floating, you do nothing, okay? Let's just go ahead and bring up the charts so we can dive into this, okay? So I'm assuming you guys understand this right here, okay? So when price is going higher, we're coming into a premium, and we look for price to be hitting these things listed. Once it does, it's like ping pong. Now we're going to bounce down lower to a discount PD array, and then we're going to go higher, but it's all inside of fractals with liquidity, okay? That's one thing he didn't know. Well, old highs and old lows and old lows and old highs, that's liquidity, okay? The screen is paused. Why? Can y'all see this? One person say yes. Can y'all see? Okay, thank you. All right. So when it comes to doing these lectures and these teachings, the hardest part is getting started on the topics and getting started and getting in that, you know, the flow of things and getting in the groove. Once we get in the groove, things will start sounding and looking way easier. So give me a minute, give me just a little bit to get in the groove of things. And it'll all seem a lot more clear, okay? We're going to start with cable. Okay, I did briefly touch on this, or I made a whole YouTube upload on what I'm about to show you, but we're going to briefly touch it right here as the first example of our lecture. It is on YouTube, but it's too good not to share for some that did not see it. But like I said, we have plenty of other examples we're going to talk about. So most recently, cable has been going higher, okay? So when you're looking at that PD array matrix, what I like to do is start from higher time frames, okay? So it's all the same. This right here could be a 1 minute chart, okay? I wish I could have it posted right here on the side of all those PD arrays, okay? So first one I like to refer to is sell side imbalances and buy side imbalances, also known as like a fair value gap, okay? When you're dealing with price and you're starting from the top down, okay, we're on a monthly time frame. We have old lows purged here, okay? And this is a monthly time frame. Everyone can agree that this is a discount. Why would this be a discount? Because the dealing range is way up here. Price was stuck sideways here, and then we broke down lower. That dealing range is going to be up here and way down here. So yes, this is a discount. So if you draw that fib from up here down to a low, and you know equilibrium, that's going to be right here. So everything below this is a discount. So we wait for those PD arrays to form below 50%. And just like that chart I showed you for the PD arrays, our first PD array we see is this buy side and balance. So before we even do this, we want to look at our seasonal charts, all right? because this is a monthly chart. It's a higher time frame. So when you're referring to higher time frames, you always want to look up your seasonals. I'm going to let y'all see it in a second. Hold on. I gotta let y'all see it. Okay. So this is the British pound 40-year seasonal chart. What you want to pay attention to is this black line. I will also post these in the channel for y'all to have. Y'all can also Google it. But what you want to pay attention to is just the black line, okay? When it's just doing this back and forth, like in the end of May and the beginning of June, you don't really want to care about the seasonals, okay? But when they do this right here, from March to the end of April, the black line, see the magnitude of this? That tells us the institutions are going to be strong, heavy, bullish. They're going to want a long British pound during these 2 months, okay? So compare this black price swing to the rest of the year. Yes, July, which is in 1 month. This is another one of my favorite trading months of the year. So this is how I find my favorite months to trade certain pairs. I start here, okay? And yes, this can be broken down all the way to the 15-minute time frame. I'm going to show you how to do that. But we just got through with the month of March and April, right? Here's the black line. This is a 40-year seasonal chart. Very strong. That's step one, okay? Now we're going to pull up. Whoopsie. Now we want to look up, not euro. Now you want to look up the dollar seasonal chart. I trust y'all. Can y'all see that as well? Sorry, hold on. Where'd it go? Can y'all see that? No screen? Hold on. Come on. All right, here we are. So we're blending that. Remember, cable for the months of March and April going into May was bullish on the seasonal. Here's the US dollar seasonal chart. March, April, bearish. So you want to make sure the dollar and whatever other pair you're looking at blend together. So when dollar's going down, foreigns want to go up. So we're using cable to blend with dollar here. So cable was going up. Now look at the black line on dollar seasonal chart going down. So they're in sync. So when that happens for these months, you have to align it with higher time frame price action. If the higher time frames are not showing you PD arrays, the PD array matrix, you don't want to push hard on this, okay? Because if you go back and you back test this theory right here, you're going to see some years on these months right here, there's no PD arrays or price is doing the opposite. So it's not a guaranteed thing. You only do it when you are given a higher time frame PD array, okay? So dollar down on the seasonal during these 3 months. Cable was super strong on the seasonal during those 3 months. So now that we got that out of the way, I doubt y'all can see this again. Zoom's probably stupid. Okay. So now that we got that out of the way, we dig into cable, monthly chart. We are in that discount from the swing high here down to the swing low here. Here's our dealing range. Higher time frame, buy side, and balance. So this is kind of hard. I trust you guys all know what these basic PD arrays are if you're signing up for this lecture, okay? This is a one singular candle going up, and there's no dip back down into it, okay? So there's your buy side and balance. The next 4 months, they do not close inside of that buy side and balance. I highlighted the buy side and balance with these two trend lines right here, starting from this candle's high to this candle's low. The candle in the middle creates the imbalance. Look at the respect of the bodies of the next couple months, okay? They are respecting bullish PD arrays on the higher time frame, and then we think about that seasonal time frame on dollar and cable as well. So it only makes sense for this to be happening. Then we're going to break it down to lower time frames. So if we're going to be coming from a discount PD array down here, where we go next, we go to a premium. Now, where's the premium inside of that dealing range? Anywhere up, okay? First thing that popped out to me was this sell side imbalance here. Similar to the buy side imbalance here. We have a sell side imbalance. So this is how I called the bullish cable over the past several months. I'm defining that logic right here. So discount, premium, and this is a monthly. Screen is off. Oh, you're good now. Okay. Lucas, yes, I did know ahead of time. I have YouTube videos where I talked about this back when these first monthly candles were holding. This looks like hindsight for this teaching. Yes, you can ask my private group. You can ask YouTube. I think I made my first YouTube video during this month right here on this example here. But yes, this was all called before the fact. But for teaching purposes, I have to give it to you in hindsight, obviously. But look at the respect of the bodies here, okay? They are respecting. You have to tell yourself in your head that this is not a coincidence, okay? There is sound logic and there's a reason behind this. They're respecting this buy-side imbalance. And then you think back to your PD array matrix. So that PD array matrix is literally the most important thing of ICT logic, okay? Without that, you have nothing. Prices bouncing up and down from different PD arrays while taking out liquidity and while filling in imbalances. So we're going up. When you break that down, these two lines is the monthly BISI, two lines up here, monthly SIBI, okay? Romeo's turtle soup, this month's low, then the month of March, turtle soup. But we're going to trust it that it's a false decline to go higher to a premium. The first thing to understanding this is trusting it. And you can only trust it once you see it enough. But note, after we did the turtle soup here, we took out this low. Remember, on the PD array matrix, old highs, old lows. That's what you guys forget, okay? That is a PD array right here. We're in a discount monthly BISI. We take out an old low, turtle soup. We break old highs here. This is a market structure shift, okay? Right here. What do we have here? Equal highs. Beautiful. Once we do the market structure shift, we form a daily swing low here. What else is on that PD array matrix? Breakers. How do you define a breaker? It's the last up close candle here prior to this aggressive down move that takes out the low here. So this bullish candle is your breaker. Note that they respect that with this swing low here. So when you see that happen and you see this swing low form here and you look left and we have a bullish breaker, took out the swing low here. Inside of this bullish candle, some of y'all are not going to agree with me here, but this is how I'm going to teach it to your brain so you can understand it, okay? And if you don't agree, just keep it to yourself. Inside of this bullish candle, banks are selling because when price goes up, why is it the bullish candle? Price is moving higher. So the price over here on the right is getting more expensive. When you sell your house, you want to sell it for the most amount you can, right? That's why they're selling inside of this bullish candle when price is getting more expensive. And how do we know? We don't know when they're doing it right here. We know after, we know they sold inside of this candle because of this aggressive decline here. That's why we know. So we have to wait. So inside of the bullish candle, they're selling because price is getting more expensive. It's the best time to sell. Sell high, right? And then the reaction, a huge decline in the market. Okay. So when price trades back up higher and we break market structure, they have to come back down to this exact candle, the breaker, to mitigate where they sold to get in sync and now buy. That's why they come back to that very specific candle. And again, well, how do you know they sold inside of this candle? Because price is getting more expensive. And then 2 candles later, what do? They sell off. So it only makes sense to think about it like that. Okay. Yes, it can be a concept, but you got to program it in your brain. Why does that concept work? I just told you why it works. Where are they going to go next? An old PD array, an opposing PD array. Remember the PD array matrix. So from discount on that, and keep in mind, price is fractal. So these first 2 lines is the monthly BISI. You break price down. Now we're on a daily time frame. So we want to see daily PD arrays start respecting higher. And then we look up. Remember the PD array matrix, we're looking up. And then also we're trying to target that monthly SIBI up here. Last but not least, the seasonal chart for cable is very, very heavy. So every single year, I want you guys from now on, every year from now on, when we get to the months of, February, March, April, May, you want to come into pound and look for exactly what I'm showing you here. You want to look for higher time frame PD arrays to be bullish, and you want to see them respect. Once they start respecting, they're in a buy side program. So here we are. Yes, old highs is a PD array. And then we all love, this is ICT 101. We all love equal highs, right? Equal highs here. Why did it look like that? I don't know. Oh, because that's where price is. So we get the swing low here to form at our breaker. We have everything in mind, seasonals on dollars, seasonal on cable. We have the monthly BISI. We have the turtle soup low here. Then we have our defined breaker, and they do a swing low at the breaker. So price should not trade back below this low. I remember when this was happening, I was looking for a buy. I couldn't find one, but I told myself if I was a position trader, all I would have to do is just buy wherever I want, and then my stop would go at the swing low. So if we're in a buy program, there's no reason to come below this swing low. Swing low here, look left, just like that monthly chart. Here it is on the daily. Buy side imbalance starts with this candle's low, this candle's high, this candle's low, and the candle in the middle creates the buy side imbalance. That swing low right here formed inside after filling the imbalance with that breaker. So now we're rallying higher. What do we want to see? We want to see all the down closed candles get respected as bullish order blocks. And this is just the daily chart, okay? But I do want y'all to just go ahead and look. I'm already spending too long on this example because I've already talked about this. But look at all the down closed candles on the daily chart, okay? Down closed candles. Then we have what? Higher price. We want down closed candles to support price. Here it is. They come down, they find support with the down closed candles because we're in a buy program because of everything I just talked about. We are coming to a premium PD array, and we're not going to stop until we get where they're going. And we know where they're going. Why? Because we're on the monthly time frame. So I don't want anyone to be looking for sells. I had some close friends of mine, they're wanting to fight this. They're wanting to fight against this, looking for sells. Yes, there's a sell day here. There's a sell day there. But why would you do that to yourself? Don't you want to be on the same side as the market makers? You want to be on the same side as the algorithm? Yes. I did not look for not one sell during this 500 pip or whatever run. When we're done here, I want y'all to go to cable and look at these months here, okay? From, I'd say from March all the way to May, you can go to cable and you're going to see, you should see more bullish price action than bearish. What does that tell you? That tells you next year, you know, you can hit cable hard as fuck during these 3 months because you have seasonals on your side and you want to make sure you have higher time frame PD arrays on your side. But anyways, down close candle here, respect. Down close candle here, respecting. Even after we take out the highs here, they're still respecting higher. Down close candle right here. I'm not going to put the zone on it, but I want y'all to note this. Right here. Note, they're not trying to come down any lower than equilibrium. I did a teaching on this as well as my most recent YouTube video. It was equilibrium teaching, but note, they're not coming down below equilibrium of this down close candle. So we start the range here. Why did we range? We ranged because we already took out these highs here. So before the algorithm finishes their run, before they come to their intended higher time frame target, you're going to see them always, and I mean always, move sideways in range and confuse people and manipulate people. Look right here, guys. See this range right here? Look, daily chart. We're going sideways. We're going sideways. They want to fuck everybody's heads up. Their intended level was this low over here. So they're going to range before they do it, and then they do it. Okay? They're ranging right here. All this chop, which I hated, by the way. It was bad, but all this chop, here's their intended level. Why this level here? Because we already outlined it here. We don't know how far up they're going to go yet, okay? But discount PD array monthly, premium PD array monthly. And then we break it down in fractals, and you want to see bullish PD arrays be respected on all time frames. When you see them respect, that's when you can start trusting. And this, like I said, these bodies, note how they're not closing inside of that buy side imbalance. When these monthlies were down here at one point in time, you may get freaked out because it looks like they're going to, you know, continue lower. You don't know how low they're going to go. But if you're not trading on the monthly time frame, like a swing trader, you can wait for the close. Once they close like this, so at one point in time, the month of March was way down here. Bearish, red, okay? But you can wait for that close. Once they close way up here, you're good to go. Then you find your buys. Why? Because we're not even anywhere near our intended target in the premium side of the range up here. But anyways, so yes, they're going to consolidate in range before they hit those final levels. And I promise, guys, I've been seeing that for 7 fucking years. They do it every single time. They always stop shy of their intended level, and then they'll make their way up there. So that's all I wanted to touch for this example, but we have plenty more to go. And mind you, when we're doing this on this cable, you can go over to dollar and you're going to see the same thing happen, vice versa on dollar. Dollar would be declining. And about that, so let's go ahead and pair that with dollar. So you guys remember, very, very important what I'm about to show you, okay? Dollar seasonal was bearish, right? We blended that with the bullish seasonal on cable, with the bullish price action on cable. What we just went over on cable was a 100% complete PD array. That was a PD array matrix. That whole model I just showed you. You can break it down more on 4 hour, 1 hour, 15-minute. You're going to find those fractals inside of a daily range. Like let's say we have one daily candle. Okay. you're going to see the same shit, that PD rate matrix. It's always an order block. It's always a fair value gap. It's always old highs, old lows. You can see that inside of one daily candle as well. But if we're looking for a bullish day and price opens and trades lower, that's going to be the discount side of whatever the daily dealing range. And you want your PD rates to form there. But so remember, dollar seasonal was bearish. I like to look at these oddball time frames. This is a yearly time frame, okay? This is how ICT called. For those that remember, ICT called the bullish dollar all last year of 2022, okay? At the time, I didn't know why, but he did. And I remember I myself was fighting that. I was looking for a bearish dollar sometimes. A lot of times I kept trying to call highs on dollar. I kept trying to short dollar, buy foreigns. I did get messed up sometimes. I didn't know until I looked at this 12-month chart, because price is fractal. I didn't know how he called it. And I'm about to show you how he called the bullish dollar all last year. Pretend this is a 5-minute chart, guys, but this is really a yearly chart. Each candle represents 1 year. So the same thing, PD rate matrix. What has price most recently done? That's the first question you ask yourself every single day. What has price recently done, and what has it respected? This is a 12-month chart, but let's pretend it's a 1-hour chart, okay? We can go ahead and we'll use this. Let's say price is right here on a 1-hour chart. And if I'm bullish on a 1-hour chart right here, y'all know what my setup's going to be? If this is a 1-hour chart, my setup would be this. If I'm really strong bulls, I would want price to dip in here. Here's my no wick concept, which is pretty much inefficiency. But it's also this little fair value gap from this candle's high, this candle with no wick, slow. No wick is a whole nother thing I probably won't touch much on here, but it's something I also discovered or noted a lot. Anyways, if I was bullish and this was a 1-hour chart, this is how I would do it. I would be wanting price to come below this no wick candle, fill in the fair value gap, and then go where? And then go to the premium. So here's our dealing range, guys. PD array matrix. High, down to low. Here is your PD array matrix. It's nothing but a fib. Here's 50%. Anything below that is going to be a discount. Anything above it's going to be a premium. If we trade to a discount first, a discount PD array, which is here, what's it going to do next? Just like at the beginning of the video, we're bouncing. We go from one to another, the opposing. So we go from a discount to a premium. I trust you guys know what all the arrays are, okay? This is how ICT called out the bullish dollar all last year. We use the PD arrays for entries and exits. So this would be entry, and then we'd want the exit, the last up close candle here prior to the huge down run. So real quick, of course that would speed up. Damn it, I'm just gonna. Where do we go? We go to the last up close candle. Yes, that's the bullish part. But what I'm about to talk about is the bearish part. So if we were looking for that bullish cable that we just talked about, we would need a bearish dollar. Dollar on the seasonal. Remember, seasonals. Don't forget, guys. I'm going to talk about that so much. Dollar is bearish for these months, these 3 months. We hit a bearish order block and a huge premium, and then we trade lower. So this is a 12-month premium PD array. We dig up in there. we blend that with the monthly cable, where'd we go? Which one is it? The monthly cable bullish profile. So if dollar is going to go lower, cable will go higher. We think about seasonals, and then we find the PD arrays, but we always start with these higher time frames. That's how I do it. I'm not a 1 minute scalper. I like to have a direction, and I like to trade in that direction. I can do it on a 5 minute time frame intraday. That helps, but you have to start somewhere, and this is where you start. So everything I just discussed with you on this cable bullish run, you would look for the opposite on dollar. And then, of course, those seasonals as well also help you out. But this is how ICT called the bullish dollar right here. He's not going to tell you that. He didn't tell anyone to look at the 12-month chart. He told nobody. I pulled it up one day. It was a couple months back, and I just discovered it. But so the last up, this is an order block right here. This is a bearish order block, okay, with a fair value gap, discount to premium. Now we hit that, and then we look how they closed. They closed way down below inside that fair value gap. So we could be getting a bearish dollar. This is a yearly. It takes a whole year for one of these candles to print. So I'm not too pressed on where this chart's going to go, but I wanted to figure out why Michael called that bullish dollar all last year. This is why. So anyways, we're going to move along. I'm going to show y'all another top down. Okay. We're going to start with, we're going to do one on Aussie. This is a pair. You go on my Twitter profile, you're never going to see me post any Aussie trades, hindsight, buys or sells or whatever, because I don't trade this pair much. It's rather hard for me, but it does move really fluently. It moves nice. It respects the PD array matrix. This is another play that I called in real time. So this is not a hindsight example. It's going to be hindsight to you, but this is how I did it. And I'm going to use the same logic to show you that it works every time. So when we were trading here, April of 2022, you can go and look at the dollar if you want. It should be bullish on that seasonal chart. Why? Because I was looking for bearish prices on Aussie. As soon as this month right here, April, closed, we look left. What has price most recently done? It's closing below this bullish candle. What does that mean? That creates, or that confirms, a bearish order block. How do I define order blocks? I don't highlight the whole candle. I don't allow them to go, or I don't want them to go inside of the body. Every time I do order blocks, I go from the wick to the open. Oops. Because that's where the sensitivity should be. If it's going to hold and respect your order block, I want it to do it from the wick to the body. So I'm waiting for that next month to open. I want them to rally into the wick to the open, and then I want them to climb. So monthly chart, this is where I start to find my directional bias. And then again, PD array matrix, where are we at right now? Where's our dealing range? Our dealing range, I'm not going to draw it from this wick down here just because it's really exaggerated. I will use the body here. So swing low, swing highs. You can do it from these bodies or this one up here. It does not matter, but I'm going to, whatever y'all want, I'll put it in the middle of both. How about that? So this is a premium market. We're starting from that monthly time frame. Okay. Anything above 50% is a premium. Anything below 50% is a discount. Keep that in mind. So we're in a premium, and we have the monthly candle closing below the previous month. That confirms the order block. We have old lows here. Like I said, I wish I could have the PD array matrix right here to just like click each time I see one that I'm talking about. That way you guys can have it in your brains at all times. You can't forget this stuff, and you can't forget the seasonals. That's why I keep repeating myself. During this, you can go to the dollar seasonal, and you're going to see the seasonal on dollar is bullish. So we're looking for bearish PD arrays on foreigns. So I want the next month to open. Power of 3, open, high, low. We're going to target old lows. That's a PD array. But where is the main PD array I want to use on the discount side? Fair value gaps, buy side imbalances, old lows. So we have old lows here, old lows here. So these are pretty much relative. That's a major liquidity pool. Right below that, we have here. This is going to be in the form of a discount. So we have this candle's low, this candle's high. Oh, wrong button. So here is your discount PD array. So we're going from a premium and we want it to go to a discount. Okay. So when price was floating right here on the monthly chart, they start to decline here. They do this on purpose to engineer the liquidity at a later time. Then they go higher, then they come down right to these lows again. And then we go higher again. Why? Because they're just not ready to come down here. At a later point in time, they're going to come down here, but we don't know exactly when. They miss it on purpose to engineer more liquidity, to manipulate. This is a monthly chart, so it may take longer, but we're waiting for them to give us a sign that they are ready to go. Once this monthly for April closed, that was my sign. Okay. The next monthly opens, we rally. This is where we were selling. This is right here. It looks scary, but this is right where I was calling Aussie sells. And there you have it. Just like that. Open, high, low, close. We dug into that discount. So all inside of this month, you're looking for sells. So what I'm going to do is we're going to go to real time. Here's that zone right here. Okay, guys. So remember what this blue zone is. Would the monthly breaker also be a point of interest? Oh, yeah. I mean, you can tell yourself that. The monthly breaker, you're referring to this down close candle prior to this back-to-back up move that takes out the highs here. Yes, you can also tell yourself that. Remember, what are they doing? What are they respecting? Monthly breaker, monthly order block, premium, down to discount. So yes, this is a monthly breaker. That even makes the probability even greater because you're blending a breaker with an order block. So during this down closed candle, as the house you want to buy, the car you want to buy is getting cheaper because it's moving lower. Price is getting cheaper. The reaction after that with the next 2 months, they shoot higher. Why higher? Because they bought inside of this down closed candle. And you know that because of this reaction right after. So they're buying as price is getting cheaper. Then we see the bullish run. Boop. One more premium, old highs. Boop. And then the month of April comes, and then we come back down. They have to mitigate their old buys inside of this bearish candle and turn it into sells with the order block. Why do they sell with the order block? Because price is going up. It's getting more expensive. That's when you want to sell, because you want to sell at the highest amount you can. If my house right now is worth $100,000, but the market next year appraises my house for $200,000, that's when I want to sell. So price is going higher. That's why the very next candle goes lower, because they're selling inside of this bullish candle. So then we have a order block confirmed. So premium down to discount. And you can break this down. This is a monthly chart. You're going to see a plethora amount of intraday selling opportunities using this same sound logic. I'm defining these higher time frames. They're doing that on a 5-minute time frame as well. Okay. And obviously we don't have enough time to dig in here and show y'all that every single day. We can build on this lesson here, but I just simply can't stay on here for 12 hours today, obviously, and do that. But so there's that level right here. So when you have those higher time frame levels noted, that's where you're going to see smart money reversals. That's where you're going to see turtle soups, Romeo's turtle soup. You're going to see that form at these higher levels. Okay. How far up? So here's a question you might ask. Okay. Here's that monthly chart. And there is our, where'd it go? Here's our monthly order block. How far up, Finesse, are they going to go up into this order block? Well, like I told y'all, I like to see them respect the wick to the body. Okay. That's what I like to see. But if you, so what I do is a lot of times, and I did that here as well. I'm about to show you what I did. You want to dig inside of the order block and find another PD array. If there is another PD array inside of that order block, that's where you know how far they're going to dig up. Okay. Here's my no wick concept right here. This candle right here has no wick on it. So yes, it's like an institutional order flow entry drill, pretty much. So there's no wick. We have a sell side imbalance. What do? They should pop up right above that. Remember, the blue zone is from the wick to the body of that monthly order block. Right above that of the open of the monthly order block, we have this no wick candle, sell side imbalance. They stab up into there real quick. That's where we were taking our sells. And then they trade lower. Where are they going to go? Relative equal lows here. That's a discount. Here's that breaker again. We have down close candles. Here's that monthly breaker we outlined. Down close candles. What happens after that, guys? Expansion higher. So during these down close candles, what are they doing? They're buying. How do we know that? Well, look at the reaction higher. Look at all these aggressive bullish candles. What do? They run. Here's Romeo's turtle soup right here. Old high. They run the high. So if you missed that and you missed the turtle soup entry, that's fine. Price starts declining. Once that month of April closed down here, the month of May opens. So we're thinking in terms of power of 3. Where's that monthly high going to be? Well, we have these down close candles, which is the breaker. We already had the stop run higher. What has price most recently done? It's most recently took out an old high. It's most recently closed on the monthly below the previous months. Right here, we closed below the bullish candle. So that confirms a monthly order block. What has price done? So now we have the turtle soup run. We have another fill inside of that sell side imbalance. And then, like I said, also, you have to tell yourself, you think it's a coincidence that our monthly order block level is blended with this swing low here? This may look like classic resistance, support and resistance, but we think in terms of smart money, how we're taught. Here's an old low. Oh, these lows right here, they formed close enough. Price should have stopped right here at these old lows. Let's just draw our zone bigger and make it look like it's real support and resistance. No, that's not how it works. Retail doesn't know that this blue zone is our monthly order block. Anyways, there is the turtle soup entry. We go lower, we fill that. So right here at this low right here is where the monthly bearish candle closed. So we're waiting for that new month to open. It opens. Where's the high going to be? It's at least going to come up into the monthly order block. So we're thinking of the PDRA matrix again. So this is what I mean by price is fractal. So when we open up a new month, we want it to come to a premium before going to a discount because we're expecting a bearish month. And then you expect power of 3, open, high, low, close. So where's the high going to be? We're expecting it to be at the monthly order block. So you can take a fib and you can go from the most recent aggressive swing high, which would be right here, down to the close of, what was that? May? Yeah. And that's here. Swing high, swing low. We want them to come up above 50%. What array is above 50%? That monthly order block, as well as the old high. These are all PD arrays. You're blending this stuff together like a puzzle. You can break this down into even lower time frames, and you're going to see. So like when it comes to market maker sell models, this is how they work. You ready? If I were to break this down, this would be original consolidation, distribution, consolidate again, redistribution. So the smart money reversals, 9 times out of 10, you see a smart money reversal in the form of a turtle soup. Okay. Where's that turtle soup? Right here. So smart money reversal is going to be at turtle soup. It's going to be at a higher time frame. So if you see a market maker sell model on a hourly, or let's just say 4-hour chart, okay? Here is the original consolidation. They're going to do the sell model right here. Here's the sell model. The reversal is going to happen at a higher time frame PD array every single time. 9 times out of 10, it's going to happen like this, and you're seeing it right now. Go back in your charts when we're done here, and you're going to see it a lot because you're going to be thinking about price differently now. If you find a if you find a 15-minute sell model, that smart money reversal is going to be either on a daily or a 4-hour. You look at all time frames. Okay, if you don't see it on one, you go to the next. Look at the next. Do you see a PD array? If not, go to the next time frame. But anyways, so here's another really good example of Aussie running completing a PD array matrix model on that monthly. And then we break it down. So when people say top-down analysis, this is what I refer to as a top-down analysis. You want to ask yourself, what has price done and where's it going? In this case, on the monthly time frame, that's what it's done. So we're going to look from a monthly premium down to a monthly discount. And if you can't find the opposing PD array, like let's say the discount, if you can't find it on a monthly, I want you to break it down and go to a weekly. If you can't see anything on with your own 2 eyes on a weekly, then you go to a daily. That's why a lot of times you'll see my entries on Twitter on like a 30-minute time frame. Like, oh, Finesse, why are you using a 30-minute time frame? Well, the hourly chart didn't show it, so I went to a 30-minute chart, and it showed me exactly what I wanted to see. So that was a top-down analysis for cable and Aussie using the PD array matrix. Both beautiful examples. And then we also talked about the seasonal tendencies aligning with our directional higher time frame bias as well. Okay, we're not done. Don't worry. I gotta look at. Bye, Evan. Thanks for coming out, bud. I'll upload the recording and you guys can have access to it later. Fred. Grant, can you share one more time with gold? Yes, we can check out gold. Let's go to gold. Okay. So here's gold. I don't have a seasonal for gold, okay? No seasonal for gold, but we will talk about it. What has gold most recently done, guys? Well, I remember. So just exactly what we just talked about on Aussie. Okay. I trust you guys can remember what we just talked about. Hold on. I trust you guys know what I'm referring to. The Aussie monthly bearish order block, okay? We just talked about that. Remember how I said I wait for that monthly to close, and once it closes, that confirms the order flow of things. It's confirming the order block, okay? Here's gold. We don't know where gold's going yet. I want y'all to note this candle here on the monthly time frame has no wick. If you zoom into that, that's my little thingy. There's no wick right here. Okay. So when this candle here for the month of February opened, I would honestly be expecting them to want to come and rally down because of that no wick. I use no wicks as entries and targets, okay? Because I believe it's another form of inefficiency that should be in the PD array matrix. I'm going to create my own PD array matrix one day, and I'm going to put the no wick theory in that. But look, whoop, we target the no wick. Also, it is blended with a fair value gap. Okay, so this candle's high, this candle's low, the candle in the middle creates the fair value gap. So we're asking ourselves, what has price most recently done? Well, this month came down and we hit this PD array. Okay. That's what it's most recently done, right? Right. We have a new month open. They go lower. Let's see how they want to close this month, guys. Let's see. We're still on our hands. When they get right here, okay, the month hasn't even closed yet. But let's just say at this time of the month, we're expecting dollar to go lower. So we see a bullish, let's say we see a bullish setup on the hourly chart on gold, okay? Then we have some liquidity above old highs. Let's just say you're really bullish on gold. Well, that make perfect sense because in our heads, we're bearish dollar. We want gold to go higher. In our heads, if the order flow is bullish, we would want it to close above the bearish candle. Why? So it would confirm a bullish monthly order block from the wick to body. So if we want this pair to be bullish, and then look left. So if we just now hit a discount PD array and we're respecting it, you guys see the respect, just like cable, the first cable monthly chart, same thing. We respected that. They're not closing below, they're not closing inside of this fair value gap. They're closing above the fair value gap. That's great. So they respected that. That's what they most recently done. Then we look left and we have old highs all the way up here. These are all-time highs. So it only makes sense to want to retrade back up there. And I remember when this was happening, I remember my mind telling me, I want this month to close above this bearish candle. So let's say you see a 1 hour bullish setup on gold. You want to come back to this monthly chart, okay? It would only make sense because this monthly candle is still trading. So an hourly bullish setup on gold would make this monthly candle trade higher. So we're coming off of this discount PD right down here. It only makes sense to want to go higher to attack all-time highs that are very equal. There's also a high right here as well. So we want the monthly candle to close above the bearish to confirm the bullish order block. So you go in there and you find, oh, right there. You just got in sync with the hourly or 15-minute bullish setup, okay? That created the bullishness on this monthly candle. So we want that bullish candle to close like this. Okay. So now we're waiting for a close to tell us if they want to continue higher or not. So when this monthly candle is fixing to close, I'm wanting it to close above that previous month bearish candle. When that happened, I remember I went in my private group. I said, gold's going higher, guys. Gold's going higher. We're only looking for buys. Why? Because we got the close above the bearish candle. So as soon as this next month opened, I will draw it out like this, the wick down to the body, because that's my sensitive area. New month opens, same thing for Aussie. Remember Aussie? We just talked about it. Is that Aussie? No, that's Aussie. Same thing right here. This month closes below this candle. Next month opens. We want it to trade up into the wick to the body and then continue lower to attack a PD array. Same thing with gold, monthly, right here. We close above. We want it to open, trade down, dip into the wick to the body. We don't want them to come way down here. There's no reason to come down here. I use wick to body. If you use wick to body, that just means your stop loss is going to have to be a little bit larger if you're strictly trading on this higher time frame. You could refine that and make it less risk if you find another a respected PD array on a lower time frame. So anyways, next month opens. They trade down, boop, into that zone, and then they go higher. So the same thing. I always use the same concepts. So that's for that monthly. Then we got up there. They did not come to the all-time highs, but they did take out the wick here. And this is obviously, what is this, guys? This is obviously a premium market if we're trading around all-time highs, okay? So now we're seeing a decline. Dollar has been what recently? What has dollar been? Dollar has been bullish recently. If we go back and look at the dollar seasonal chart, it's going to be bullish right now. That means gold, that means foreigns should be trading lower, okay? What do we have? Since we have nothing else to talk about on that monthly time frame, we got to break this down. Now here's where we get into our PD array matrix, okay? Swing low, swing high, 50% is going to be roughly, in here. Anything above that's premium, anything below it's a discount. I do want to use that. So your eyes might not be able to see this, but mine do, okay? I'll go ahead and tell you. This bearish candle is my breaker, okay? Right after that, we have the pop above the high here. So if dollar is bullish on seasonal and you're looking at the dollar chart and you're physically seeing it rally as well, you're physically seeing it respect bullish PD arrays, you have a target in mind for dollar as well. So it only makes sense for foreigns and gold to go lower, but you can't just go in there and start selling. You have to physically see what just happened most recently and what's happening right now. As you guys know, the past 2 weeks I've been bearish on gold, and I'm about to show you why. Y'all saw me post my chart. So that weekly breaker, and if it doesn't look too good to you, here's the daily chart. Some people ask me, why didn't I use this candle as the breaker? Because this was the last bearish candle prior to the up run here. Well, the reason for that is I'm picky about breakers. I don't like how there's no bulk in the body, okay? It's just a wick. So where's the most recent strong bearish candle? I choose this one. Okay, I'm going to delete this zone because we've already done buy side. That was the buy side monthly bull shorter block. That's what that zone was. So here's my breaker. Down close candle. It's a strong body close. And then we have the pop. Here's Romeo's turtle soup right here. Remember what I said in the last little teaching I just did on Aussie and cable? price is going to consolidate before they come to their intended overall target. You see that right here. Confusion, manipulation, then a pop. The turtle soups happen at the higher time frame, premium PD arrays. We know we are trading at all-time highs right now. So we're expecting it. So it is a premium. So when we pop above that, we don't know anything yet, but when they start trading lower, watch this. Here we go. This is how you can trust the early turtle soup. So when they pop above that, and then this candle right here on the daily closes below this bullish candle, I then, if I'm bearish because I'm bullish dollar, means I'm bearish gold, I'm bearish foreigns, I take the wick to the body, and I tell myself I want the next daily candle. If this was a valid turtle soup at a premium array and they're going to go lower, why would they want to go lower, guys? Original consolidation right here. Original consolidation, distribution, redistribution to get the high, to run the high one more time. Smart money reversal, turtle soup. Now we're on the sell side. We're going to attack original consolidation. So again, smart money reversals up here, turtle soup, premium level. So we have all these lows here. You mean to tell me the market's not going to want to come and take all these lows? Shit, you crazy as hell. Below those lows, we have these lows. Trend line traders, retail logic right here. We have lows over here. So I'm waiting for the next candle. I want it to start going on the sell side. What do I mean by that? I mean, I want them to start respecting bearish PD arrays. Is this a bearish PD array? You damn right it is. I want them to open, come up to the wick to the body, and respect it lower. Once I see them do that, there you go. Yeah, they didn't respect wick to the body, but they respected the overall bearish order block. Once I see them do that right there, that's when your mind flips and you are now in a bearish profile. What have they most recently done? They've taken a high. They've respected a bearish order block. So now you're bearish. Where are you going to target? Old lows, original consolidation, old discount PD arrays, because we just hit a premium array. Now we're going lower. Now you go into the 4-hour, hourly, 30-minute, 15-minute, 5-minute, intraday. You're going to see these same models right here I'm showing you on the daily, on the higher time frames. You're going to think about price the same exact way as if this was a 5-minute time frame. So when you're trading inside of one daily candle, if you don't want to be on this time frame, well, you have to be on this time frame, in my personal preference, my opinion. This is where you start. This is how you get inside of each daily candle and find these concepts working to be on the right side of the market. Intraday, if you want to be inside of this daily candle right here and you want to make sure you're not buying inside of this daily candle, you have to start on these higher time frames. Then you're going to be inside of this daily candle intraday on a 15-minute or 5-minute chart. And you're going to look for these same concepts, but you're going to be bearish because prices, what? Prices fractal. We're not going to do that in this session because I just can't. I don't have it in me right now, but I want y'all to keep that in mind. Let's say you missed this right here, okay, guys? Let's say you missed the turtle soup up here. Let's say you missed the order block entry here. You're too scared. Price comes down. We take out these lows. Let's say you missed that too. That's okay. You know why that's okay, guys? Because I fucking missed it too. It's all right. I don't trade gold that much, but I missed all this. I missed turtle soup. I missed the order block. When I came to this chart right here, it looked just like this. All right, guys? But I'm telling y'all what my mind thought. What has price most recently done? We just went over it. Look for the breaker. This candle here's the breaker. So same with order blocks. I do the same thing with breakers. Wick. to body, extended out in time. That's going to be my resistance level for next week. And that's the week I think this was the last 2 weeks. Yes. So this next candle will be Friday, was the close of actually last week. When we closed like this, I told my private group, I told everyone I fucking knew. I went online, I said, everyone, gold's going to be bearish next week. And this is why. There's your bearishness right here. That's like 300 pips, guys. 2 daily candles, 300 pips. We trust this because of the bearish breaker. I'll go ahead and define the logic behind it again. Down candle, it's getting cheaper. They buy when it's cheap. Pop above high. They go lower. They respect order block, come down. They have to come back to this exact specific candle. That's why when I posted it on Twitter, I drew an arrow and I said, this is the most important candle on the gold daily chart. Now you know why I said that. Because I knew the algorithm and the banks or whoever the fuck else has to come back to that candle to mitigate their old buys they had. Well, why did they have old buys here? Because after this downward candle, we have the bullish pop. Why buys? Because look at the chart. Look what they're doing. They went higher to take out an old high. So that's the breaker. That's the concept, the logic, the sound logic behind the breaker. They got to come back to that level to mitigate their old buys and then get in short. And that's what you see happening. So that's there's your gold example. I forgot who asked for that. Where do I want gold to go? Well, right now for this new week, I'm kind of 50-50, okay? Just because of how they closed last week. But if we're thinking in terms of the PDRA matrix, I'll go ahead and give you all my gold analysis for this up and coming week. Okay. I want to go to, let's do a little quiz, okay? Someone in the chat, tell me what my eyes are looking at right now. Somewhere in here, what did price do recently, very, very recently, that's drawing my attention? I want someone to tell me. I'll zoom in. Oh, right. Oh, Airy. Okay, some guys are saying the wrong answer. Oh, Airy said it. Ashik Bro said it. Okay. So for the guys that said the wrong answer, I'm going to go ahead and go back to this chart real quick. Where's it at? Remember, guys, that example we just talked about on Aussie Monthly, what was the most important thing that stuck out to me here? This monthly candle closed below this bullish candle. Power of 3. We just went over all of this. So tell me, does this right here on the monthly chart on Aussie look similar to this right here on gold daily? Tell me. It does. Extremely similar. It looks like the exact same thing. But we're going to remind ourselves that what has price most recently done? Look left, breaker. Look up, turtle soup, premium, order block, respecting the bearish profile. So we're expecting something to happen right here, okay? Yes, I did get in sync with this sell here. When price came back last week, I was not selling again. But now that they closed out last week like this, I am considering it. I would want the next candle, just like Aussie monthly. I'd want the next candle on gold daily. So what am I going to do? Wick to body, extend it out in time. I would want the next candle open, power of 3 open, high, find their high early next week inside of here. And then continue lower. Why lower? Because we're respecting all this. And we have an old low here. We have this no wick candle down here with a big old buy side imbalance. So I don't know in terms, that's like 1,000 pips away. So it's not going to happen in the blink of an eye. Okay. But if dollar stays bullish next week, this is the setup I'd want on gold. I want it to open, power of 3, open, high, low, close. So I want it to stay respecting bearish PD raise because of what's happened recently that we just talked about. Okay. You can draw that fib and the overall range from the swing low down here up to the highs. Anything below this level here is going to be a discount. So we're trading at a premium now. So I would want them to trade down to a discount. The only thing I have in mind that would negate that is, again, this monthly bearish candle here. Are they going to respect that and stay bullish? Or are they going to disrespect that now since they've already done their work up here? Are we going to see it trade lower inside of this bearish candle? Which I think they can, as long as we get that bullish dollar. But yeah, similar to Aussie monthly, gold daily. So that's what I would want. There's your little pop quiz. We'll see what they do this early this week. And then you can go in intraday and look for these same models. You want to see, bullish candles on a 15-minute time frame hold as resistance. You want to see old highs get ran. When old highs get ran, that's a turtle soup. But I will say, what would negate this? What would make this invalid? Well, the fact that they closed below that and confirmed this daily bearish order block. I do not want gold to trade above the bullish candle because in my mind, I'm thinking they should be going lower. So if they trade above this bullish candle, then it's done. Sell side is done. They need to respect this if they're going to go lower. They have to. Are you referring to these relative equal highs all up in here? If you are, weekly, the ones way, way up high. Yeah. You're talking about these over here. But you gotta consider those are all-time highs. Okay. And then you also have to consider what's dollar doing, what's the seasonal saying it should do, what is price action currently doing. I think them coming up here doing this, what they just did, I believe that could be enough. And we could dig down a little bit further into this buy side imbalance. This week right here is what created that monthly, what confirmed that monthly order block. Then we stabbed up in here. But the fact that they did this turtle soup up here, this is a premium market, okay? I don't think they necessarily had to run these all-time highs. But now you guys, if you trade gold, you have the sound logic. They should not, if they're going to keep going lower, they should not trade above this bullish candle here. So that's how you define your risk. If you guys want to do a lower time frame, we can. Let's do a lower time frame cable. Well, I'll take everything off the board. We're going to talk about the PD array matrix on a lower time frame, okay? Intraday. We'll do it right here. This is another setup I took 2 weeks ago or last week. So this is intraday, okay? So we're going to look at this. So this vertical line here is the daily open. This vertical line here is the daily close. I want y'all to look in between that, okay? All this price action was one daily candle, okay? I want you guys to ignore everything to the right and everything to the left. Just keep your eyes in between these two lines, all the price action in here. So from what we just talked about, I want you guys to think about this as if it was that monthly chart, or if it was a daily chart, okay? What do we have here? This is the PD array matrix is fractal, okay? And price action is price. This is how you read price. So right here where I just hit the replay button, we have this bearish candle, boom, that's displacement, okay? That's 8:30 in the morning. We all know time is very sensitive. 8:30 in the morning is what? It's our New York kill zone, okay? So that's the time of day you'd be wanting to see PD arrays get respected. That's the time of day you'd want PD arrays to start presenting themselves to you. If you don't see nothing, then you do nothing. Because when the algorithm is going to do something based on the PD array matrix, it's going to show you. And the hardest part about all this is just waiting for them to show you, okay? So what has price most recently done? Well, I would tell myself price has most recently took out equal highs here. So the London session rallied up. London actually created equal lows. We rallied up. We took out equal highs. So our dealing range for today, also look at these highs they took out over here. I know I said ignore that, but you can't ignore that. They took out buy side all right here. And we're approaching the New York kill zone. Okay. The dealing range for today is going to be from the low to the high. Okay. So we're looking at price in the form of our PD arrays. Anything above 50% is going to be a premium. Anything below is a discount. So we're coming off of the discount. Where are they going to go next? They're going to want to come to a premium. So that equilibrium was about right here. What do we have below the market? We have equal lows. We've had highs already purged. What has price most recently done? We've most recently purged highs. Let's just say for this particular day, we're expecting dollar to go higher. And according to the seasonal chart, we were expecting dollar to go higher. So we're expecting foreigns to go lower. Where is our bearish PD arrays? Well, old highs are a PD array, but I'm going to take this off because it's ugly. But just know we've ran old highs, okay? Pretend this is a monthly chart. Pretend this is a daily chart. Displacement lower. So that's a sell side imbalance, buy side inefficiency. So that's a SIBI, displacement lower. 8:30 in the morning, we want price to want to fill in some of that. Our eyes are going to go down to old lows because that's a discount PD array, and they're very equal. Oops. We have this swing high right here, okay? Extended out in time, that is a pop in price. So here's the manipulation that happens before the kill zone. We go higher, tricks everyone to think everyone's bullish, make everyone think we're going higher, but they took out in high. Then when you see this displacement lower, your eyes in your brain, you have to tell yourself, what have we most recently done? Took out them highs we just talked about, took out this high here. What am I about to say, guys? What do y'all think I'm about to say? Think Romeo. What would Romeo say? Again, bearish candle here. What happens after that bearish candle? A bullish pop inside of a kill zone. So during this bearish candle, we're getting cheaper, prices going down. Then the reaction of that is a bullish run. So they were buying inside of this down close candle. How do we know they're buying? Because right after that, they have a bullish pop. And it's an aggressive, you want them to be aggressive with it. And they were. And then we displace lower. So we're looking for an intraday setup now. PD array matrix. We want them to come to the down close candle, which is here, blended with this displacement. They need to fill in some of this down close candle as well. It's a sell side imbalance. And then we'd want them to go lower. So breakers are my favorite, guys. I think my next lecture, if I ever do another one of these, it's going to be, we're going to talk heavy on breakers. That's my favorite entry technique. I trust it more than order blocks. Yeah, you can think OTE as well. Break it down to a 5-minute, but same thing as I would say if it was a monthly chart. They want to come to the breaker. Boop. Okay, I remember when I gave this signal live to my private group, guys. And I remember when we were right here coming lower, I gave sell limits for cable at this breaker. So I did this live. This is not hindsight. Okay. I remember there was a couple people saying, oh, we're not going to get triggered in. They're going to take sell side before our entry gets hit. My response to that was, be patient. You have to be patient. Look how early it is. It's only 9 o'clock in the morning. Okay. Yeah. If they would have ran the lows first, it would have negated the setup. You got to pair the array with another array. And if they're going to take out this array in the form of equal lows before coming to the breaker, that's not good. You want it to come to the premium first before going to a discount. And they do. They come back, hit the breaker, and then now we're very confident in that sell-off right there. When that happened, some guys missed it because they didn't trust it. They missed this run, okay? When this 15-minute candle closes, just like that, hold on. I said, if you want to put money at risk and you feel like you're itching to make a trade and you missed the breaker, this was the signal up here. Stops go above the breaker. If you missed that for whatever reason, because you couldn't trust me or you couldn't trust this, once this 15-minute candle right here closed bearish, how'd they close? They close below the bullish candle. So we're in a bearish cycle. They should respect the bullish candle in the form of a bearish order block, and they do. So I told them this bullish candle should hold as resistance. And then look, they hold as resistance. Same thing. This bearish 15-minute candle closes below this bullish candle. So the next candle right here, when we close down here, you'd want to see an open, high, then continue lower. Sometimes they're going to do that. They're going to miss the wick. But you should already be in sync with this market due to up here and right here. And then there you have it, your daily range. You want to get out of the market when you're trading intraday, you're going to see the highs and lows form, around 11, 12 o'clock. So you want to be getting out of the market. The profile is complete. Yeah, if you're trading breakers, you want your stop loss. So if I was waiting for price to come up, fill in this sell side imbalance and hit the breaker, my stop is going to be at the high of the breaker. So when you trade smart money concepts, the beauty of it is this. Risk to reward is my favorite part of smart money concepts because the accuracy is insane and the RR is beautiful. You know they're not just going to come down to this low and stop and then go higher, but that would be your first target here. And then lower. Last but not least, I can touch on this real quick. When the market does this right here, consolidates real tight, come into a daily close like this, like all this consolidation all right here. Standard deviations. You could probably take this deviation right here, stack it up, and guess what? This would be fun. It's going to give you the daily high right here. Boop. I love standard deviations. You only want to use standard deviations when the market is consolidating real tight like this and you're expecting a down close day. So when the market's coming up like this, standard deviation, probably 2 stacks, 1 stack, it's gonna give you right around the daily high. You blend that with, so when price starts to come lower like this and then they create that breaker, that standard deviation is just another confluence to tell yourself that they should not be going any higher and that they should, in fact, respect the breaker. One second, guys. Let me check something out. I need to look at my. All right. How long has this been going? I'm going to give y'all a bonus. I'm going to upload some bonus content inside this channel. So don't leave this Telegram channel, okay? I'm going to record something. It's going to be a recording. I'm going to post this recording in the channel. And I'm also going to give y'all a bonus additional recording, which will be another hour-long video. Does anyone have any really important questions that you're just dying to ask me? If you do, feel free, tag me on Twitter, inbox me, ask me on Telegram. I spend a lot of time on Twitter and Telegram, as you guys know. And I'll try my best to get back to you. I want the questions to be about what we covered today. Mastermind, why did I mark that as a breaker? Well, if you were paying attention to, you know, our recent lectures, and if you know what the PD arrays are, I listed them at the beginning of the video. A breaker is a down close candle, and then after that you see a break, and they run liquidity, they run stops. When price trades back below that, especially with a strong close like this better yet known as displacement lower, and then they come up. So that's a sell side imbalance. The breaker is this candle because after this candle, this is the candle they used specifically to break structure, to break an old high. So they're buying inside of this down close candle. Like I said, it's a whole nother topic. We'd be here for a long time if I showed y'all 100 examples of breakers. But I assumed you knew what a breaker was prior to joining this. And if you don't, if a lot of y'all don't know what a breaker is, I will, that could be some free content I post on YouTube, Breakers 101. I actually have a really large collection of breaker trades that I've taken over the past couple of years, and it's quite beautiful. They all look the exact same. That's what's beautiful about it. That's why I trust it so much, because I've seen it for years and they literally are all the exact same fucking thing. That's why I love trading. I actually posted, I remember a couple months back, I gave y'all a on Twitter, it was what was it? It was a, what is it called? It was a Dropbox link of a lot of previous setups that I took in the past, and a lot of them were breakers. I'd be willing to upload that in the Telegram as well that you guys are in. And you can see how all the setups that I take, they all look the exact same. And if they don't look the same, it's because you're not thinking about price the same yet. So it's a thought process. Like I said, we can build on this lecture as well. We can build on this. But I do want to note that there is some other stuff I want to touch, and I'm going to record that and upload it to the Telegram channel that you guys are in right now, the channel that y'all paid for. I will upload that there. How do you know your true? Yeah, Sola. Romeo is not wrong on that. It all just depends what the algorithm is showing you. You know, if you can't see it on one time frame, you're going to go to the next and you're going to find it. If I were to break this down right here, okay, if I break this fractal right here down to a 1 minute or a 5 minute time frame, you're going to see a let's just say 1 minute. You're going to see a market maker sell model right here. And this right here is going to be your original consolidation. You're going to have distribution here on a 1 minute time frame, mind you. And then you're going to have that smart money reversal right here. And then price is going to attack original consolidation, which is down here. And you see that happen here. So this is a 1 minute market maker sell model. Price is fractal, guys. And when you see it for what it is, that's when everything starts clicking. Yeah. Low risk sell. You're right. So K-Tez, I see you're about to get off. So this is related to short-term trading. What we define today is how you arrive at that short-term trading. But I'll make sure my next upload, it'll be more lower time frame stuff. But what we did today is we arrived at how do you get involved with short-term trading? How do you get involved with that lower time frame directional bias so that you're not caught, you know, on the wrong side of the market? When we discussed that monthly, weekly, and daily bias on the examples we went over today, that's how you arrive at your intraday short-term trading direction. Without those higher time frames, you have nothing. You're going to get caught on the wrong side. So you have to start somewhere and you have to finish somewhere. It's fractals. It's a puzzle. It's a giant equation. You have to start on those higher time frames to arrive at those lower intraday time frame setups. So for example, if you want to trade Tuesday, guess what? You don't just go in the market Tuesday. You can, but if you want the probabilities to be in your favor, the most highest probability trading, you know, because you're putting money at risk. Okay. Why not be aware of your surroundings? And what I mean by that is your surroundings, like in life. When you're driving down the road, you want to be aware of your surroundings. How bad is traffic? Okay. Same thing in these markets. When you're on that, if you're just looking at the 15-minute time frame, guess what? You're not aware of your surroundings. That's why I implemented those starting at those higher time frames. You want to be aware of what's going on around you so you don't crash like on a road. You want to be aware of your surroundings so you don't crash into someone else. In the markets, be aware of your surroundings so you don't crash into a loss on the wrong side of the market. You can avoid being on the wrong side of the market by starting at these higher time frames. And then you stick on one side of the market. So for our first lesson on cable, we started on the seasonals. Remember, we blended cable and dollar seasonal, and then we blended that with, we went into a higher time frame and found out where our PD arrays were on those higher time frames. Where have we most recently came from? What are we inside of right now? And then you break it down, you break it all down. And then that's how you find out your surrounding. So you go in, you stay on one side of the market until you arrive at your destination. And you don't deviate from that. You stay on that buy side until when? Until you reach a premium. Yes, there's going to be sell days. But why would you want that? Why would you want to be on the wrong side of the market? It makes no sense. You're going to have people come in here and say, oh, well, yeah, I'm on the 1 minute time frame and I sold it. Look at this. I don't give a fuck. That's you. I'm trying to convince you and teach you how to be on the right side and have the probabilities forever more in your favor. And that's how you do it. Same thing for the Aussie that I showed you. We'd be here all day. And no, this isn't it. Like, I could literally sit here every single day with you and show y'all example after example after example after example. It would turn into a never-ending thing for me because I don't cherry pick this shit. I can literally do it every single fucking day. If you go to another teacher, guess what? They probably picked out 3 examples that they found in the past 5 years that make it sound and look really good for you. That's not what I do. I can find that example every single day on every single little fractal, and it's never going to change. I'm never going to change my words. I'm never going to change the logic. But like I said, stay tuned. Don't leave the Telegram channel. I do have one more upload for y'all. It'll be a little bonus video. It'll get posted later. And hopefully you guys learned something insightful from that little lesson there. I appreciate everyone coming out. And as always, thank you for rocking with me. Thank you for the support. Huge shout out to Romeo. It's a good friend of mine. You know, we just clicked, you know. There's not a lot of people you can trust out here. You know, there's a lot of noise, a lot of negativity, a lot of hate, but Romeo, he's a good guy. So if you don't follow him, go ahead and give him a follow. He posts a lot of very insightful stuff as well. And I'll see you guys inside the circle. All right. Peace.